A new investor just getting started. Where do you find your research? How do you know what stock is the best one? How much to buy? When to buy? Hello and welcome to the Trading School. We're here to help the beginner, those who are just starting out, give you ideas, a thinking process, a process of buying and selling stocks, ETF funds, and etc. Today, I want to talk about the what I call a 5-step process in buying a stock, selecting a stock, etc. So let's get started here. On the chart, I've got the SPX, which is the S&P 500 index fund, which I like to use just like the boys on Wall Street uses. So in that process, the first thing you want to do, number one, is what is the market trend? Remember, the trend is your friend. That's an old saying, has been around for many, many years. But if the trend is going down from the market itself, the overall market, I would kind of wait until we had an indicator, something new, something in the pattern change as to when I'd be looking for a new stock to get into. But in this case, I've drawn this chart here back in midsummer. We had a high point, and from that point down, all the way down to looks like October, late October is where it bounced. Of course, at that time, we did not know that was going to be a bouncing point and market going back up. But at that point, the trend starts back up and has been ever since. So the first thing you look for is market direction. Here's another thing you can remember. A rising tide or rising water will raise all ships, most all of them anyway. So keep that in mind. Overall market goes up. Typically your price, or the stock price will go up. The low tide comes in, goes down. Most stocks price will come down also. So one way to remember it. Secondly, you look at what sector do you get into? And I've got a couple things here, and this is in the Thinkorswim program from Ameritrade, Schwab, what have you. I watch this daily, and this particular day, let's sort this by the biggest increase. Today, the money was going into the industrial sector, the real estate, finance, and etc. And you can see the percentage change in that particular sector of stocks. But one thing to remember, if an investment house, Goldman Sachs, Wells Fargo Bank, JP Morgan Bank, what have you, wants to sell and or buy into a particular stock and or fund, they don't buy all of that in one day. It has to be pieces here and there, because if they do it all in one day, other people, it will draw attention to other people. They'll say, my gosh, a gigantic burst of 1 million shares here bought by somebody, they don't know who, but they want to get in also. So they do it over weeks, they do it over months. I've seen some indications they've done it almost over a 6-month period. But in this particular case here, if it's sorted by today's change, I like to use a 4-week period and also look at the 3-month period. In this case, information technology stocks, a whole basket of funds or stocks in that particular sector has been moving up. So it's doing good here in the last 4 weeks. If you look back to the last 3 months, it's had a 20% increase. Very good. And communication, it's up 5%. And healthcare seems to be moving up this particular point. I think some big people are starting to buy into it a little bit. But let's move on from here. After you find the sector that you're interested in this case, I'm going to pick on the information technology, tech stock. And let's bring up another way. Where do you find all this information? Here's one place to find it. Go to the website and look for the select sector of SPDRS, SPDRS. And in that, you'll see all funds here, for example. You'll see an overview, but you'll see communications, for example, consumer discretionary funds, etc., all the way down the line. I've been keeping my eye on the technology sector. So let's open up the technology sector and see what it's been doing here. Disregard this pricing over here at this point in time. We know it's moving up, or the 29% of the money by these investors, or excuse me, the fund managers. They've got 29% of their total money put into the technology sector. But I like this sub-tab here, holdings. That tells you what stock, what company, how much, not how much money, but how much index weighted. 22% of the money going into the technology is through Microsoft, 22% weighted. Here's almost 21% Apple. I've been keeping my eye on AMD, for example. They've got 2.94% in that one. So that is one place. Let's take a look at another here. You can find this information. Go into the Ameritrade, TD Ameritrade website, or Schwab. It's the same information. Go to the research and ideas. Go into sectors and industries, which I've already done here. And it will bring up, bring up the category of what that particular sector is holding. In this case, I'll look for Advanced Micro Devices, AMD. I've already had this up and looking at it as an example, but follow this tab here is in that particular category of tech or information technology. Go into peer comparison. This will give you an idea of where that particular stock, in this case AMD, indicated by this black line here, has grown in this case, in the last month. We've had just over 20% increase here in just the last month. So it's outperforming its peers, AVGO, Broadcom, Qualcomm, ADI, which is Analog Devices, and MU, Micron Technology. The lowest in this particular one is ADI, and you can see it's just about broke even here in the last month. So people are putting their money into AMD. This is not telling you what to buy. I'm just giving you as a reference and let you do your own particular research. So let's say we decided we want to want to buy AMD. So the first thing we did was look at the market trend. And then we looked at the best sector we found industry, which is information technology, what to buy. So we did the research on the stock and we looked at peer comparison. Now, how much do you buy? I've got a video out already out, and you can take a look at that on the playlist on YouTube. That's how much to buy. But give an example, how much to buy. As an example, let's pick $5,000 that you have sitting on the side. You want to invest that in AMD. So that's the total buy-in, but you do not put all that in at one time. You want to just test the market or test that particular buy-in, and now only use 20% of that 5,000, which would be $1,000, to go in. If it moves up 1/2 to 2.5%, that has proven itself that it will continue in that direction. So once it's moved at 1/2, 2%, add 30% more of that 5,000, which would be $1,500. Now you've got $2,500 in the stock. AMD, and it's still going up as an example. Let's put AMD up here since we're talking about it. AMD. So it once it goes up another 1.5 to 2.5%, add the final 50%, which would be 2,500. So now you have a full position in AMD, $5,000. Now, don't just walk away and check it from once a week, once a month. Forget about it just because you bought something that's good and it started moving. You kept buying and buying. You've got to check this all the time. And I don't mean every hour or every day, but keep an eye on not just the dollar amount of money that you're making. Keep an eye on the chart. If you don't look at the chart, don't buy stocks. If you're afraid of the chart, don't buy stocks, because that proves where the investors are putting their money and it's working out, and they want to stay in it. They keep buying and buying. Like I said before, the big houses, JP Morgan, Goldman Sachs, and Wells Fargo, the big houses like that who invest, they buy this over time. So over time, they keep buying more. Here, they bought some more. And they sat back and waited. The stock fell down because no one was buying. So someone started buying, it goes back up, and etc. So always look at a chart. Never, never, never forget about a chart. So that's that's how much to buy. And number 5 is on the list is when to buy. You can do that from multiple ways. You can use let me open this up some more so it's the better reference here. Let's look at buying it within a moving average. In this case, it was wanting to go sideways, wanting to bounce up and down, up and down. We kept getting lower lows, and we thought, well, it's not going to do anything. We never did get any higher highs. So in this case, we did not know at this point in time that that was the bottom or going to be the bottom. So we waited. So let me highlight this particular blue or green moving average. In this case, I like to use the 8-day, 9-day, 10-day moving average as a buy-ins. So at this particular time, when it crossed above that 9-day moving average, I bought in, for example. Bring this back down as a reference here and see where it's been going. So this is just an idea. I did not buy it here. I'm just trying to give you an example. So let's say you bought here on this particular day and you kept buying and buying and it kept going up. And today at closing, it finished at 168. And that would be percentage-wise about 61% in 55 trading days, not calendar days, but trading days. So not bad in that particular case. They all don't work out that way, but in this case, it did. So at some point in time, this stock is going to come down. And as you can see, someone has been doing some selling here. And if you look at the bottom of the chart, I put on the moving average, and also with the average, I'm using a 50-day moving average. This particular case, there was a lot of selling going on. Average for this particular day would be 63 million shares traded, but in this case, 122 million were sold. It means there's more sellers than there were buyers today, because those who bought in are just waiting for something to happen, something to explode, something to go wrong, and it will start falling again. It could be geopolitical. We don't know what it's going to be in this case. So keep an eye on the chart. I cannot emphasize that enough. So like I say, when to get in, there's a chart pattern you can look at. Here, for example, I go out. Let's do it this way. Let me show you what I call a cup with handle. Here's a good example. I'm just using the S&P, but I'm showing you a pattern which I want to emphasize. This I call this a cup. So it started here, and in general, it just keeps going down, 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 down. There at the bottom of the cup, and it comes back up in this particular case. So when it reaches here and or breaks out, what I call breaking out at this point in time, that's when a good time to get in. If this was a stock, in this case it's not, if this had come down, in this case, it would bounce off here and then go back up. So when I see this, it has to be confirmed before I actually get into it as to not exactly at the top of this, but just a little bit above it a day or two later. But in this case, as an example, it could come down, forming a handle, and then back up. And at this point in time, that would be the point that I'd get in, because in most cases, it's going to continue going upward. So you use that as one indicator. I'm going to do a video on patterns as to when to get in. So once again, all we're trying to do is just protect your money, preserve your portfolio, don't lose money. You will, at different times, you will lose money, but you want to manage the risk. You want to, if you see something not going right, going in the wrong direction, a lot of selling taking place, like I just mentioned on AMD, consider watching it very, very closely and get out before you lose money. You want to manage the risk. Manage by checking the chart. Always, like I said a dozen times ago, always check the chart and don't be afraid of it. Read the news, and you're going to, and I'm not talking about social media. I'm talking about actual news, CNBC, Bloomberg, etc. You can read the news on them from your Ameritrade application or website. You can do the same thing with Schwab. It gives you all the news. So I hope this helps you find a stock, find the industry, when to get in, how much to buy, and et cetera, et cetera. I'll continue doing these. But once again, as review, the market trend, up or down. What sector? What's the best sector at this particular time? Look at it over 1 day, a week, a month, 3 months, and et cetera. What direction is those sectors moving? What to buy? Find a particular stock from those listings I showed you on the website. How much to buy and when to buy. And I'll do more on this on pattern trading. And when to exit, because at some point in time you will exit. If you don't, you will be losing money. So I hope this helps you. If it does, hit the like button. It'll help others identify the fact that, somebody liked it. I just mentioned up here, for example, this process works for looking for stocks, or it also works for finding ETF funds, electronic traded funds. And let's put on here SPYG. What is SPYG? It's a basket of stocks, basket of companies that this particular fund manager is managing. And the G stands for growth in that group of stocks. He and or others in that particular fund manager group are always looking for growth funds to add to that particular fund. So let's take a look at this. Look at it on this is a 1 year chart. Let's look at it on a percentage here. In 1 year, back from today, that particular fund increased 20% in 1 year. There's another one, SPYD. SPY is the S&P 500. The D stands for dividend stocks. All the stocks in that particular fund are held by The fund managers, they all have good dividends. SPYV, V for value stocks. And of course, XLK, which is the Select Spider Fund, which I was demonstrating here a while ago, is the information technology. So XLY is discretionary, and we use an example, AMD, as a stock we were trying to give you an example of. But if you like it, hit the like button, hit subscribe. It'll show others that it's something that they should be taking a look at, and it'll help this trading school video go up in the algorithm with YouTube also. So I appreciate it, and I'll catch you on the next one. Take care, and bye now.